Today, I spoke to Michi Jacob. He was the global head emerging markets, low syndication at Credit Suisse, which means he is the big boss for syndicated loans in emerging markets. I met him at Deutsche Bank when I was in New York back in 2001, 25 years ago. And we remained connected all these years. We spoke about culture. How is it to work for Credit Suisse and Deutsche Bank? We spoke about syndicated loan. We spoke about a career in syndicated loan. We spoke about a career in Latin America. We spoke about a couple of transactions that were really relevant for him. And on the personal side, he holds a big surprise for you. Very unexpected. I doubt any other guest will have something that unusual to talk about. And that makes really sense. You're going to love the conversation I had with Michi Jacob. Today we have a very special guest at Diário de Banker. We have Michi Jacob, specialist in loans in emerging markets and credit and Latin America. I've met Michi at Deutsche Bank in the early 2000s. So the first time I went to New York, he was there next to me doing transactions in Latin America. Totally different times. So Michi, I'm very pleased you're here today. It was a last minute call. You reach out, you're here in Brazil, you're here in São Paulo, and you say, you know what? I need to interview this guy.
Oh boy.
And it worked, you know? I love that. That's always the best interviews, the ones that you don't expect. So would you explain to our audience, what have you done over the years at Credit Suisse and Deutsche Bank?
Well, first of all, Jose, thank you very much for having me. Last minute seems to be the theme of the market anyway. So thanks for having me. And it's a pleasure speaking to this audience. So what have I been doing the last 25 years since last we met? Let me focus pretty much the last 18 years, 16 years of which I was at Credit Suisse, most recently as the global head of emerging markets loan syndication. So that's essentially the function that every transaction in the private markets that the firm syndicated, I was either directly involved in syndicating it, forming the syndicates, or my team was involved. So I was New York based and was very day-to-day involved in the Latin American side of the business, but I also had the desk that did the whole thing for CEMEA report to me, and I had the oversight also over the underwriting capacity. I left Credit Suisse in 2022 in the context of obviously major strategy change, to put it in the most polite way.
Exactly.
And I've since set up my own firm called Global Capital Consult. And that was really the continuation of my career, but now independently, when I very quickly realized in my position, level of seniority was very unlikely to find a similar position in a structured environment, but also very quickly realized that I've done this for a long time, and people still wanted to work with me. So I set up my own firm now, really conceptually as an outsourced syndicate desk, and focus on a lot of debt raising, in a market where, let's say, the big banks don't typically play.
All right. Would you explain what a syndication is?
The syndication is it's really the formation of a group of capital providers, none of which alone would want to provide debt, the word is used in the equity markets as well, to finance a company for a number of reasons, capital constraints, credit limits, or whatever. So a syndicate is really typically a group of lenders, or in the debt capital markets, or bondholders, who in their entirety provide a lending facility to a company.
And that way they do that to diversify risk.
So there are two aspects, right? For the individual lenders, they can participate in transactions and can diversify their portfolio, their lending portfolio. The benefit, obviously, for a company is rather than having, say, 15 separate lending facilities, they have one lending facility that is administered typically by one agent. They have only one set of reports to provide. They have one phase of interaction, instead of having to monitor, a whole broad range of facilities.
And the leader is usually called a ranger?
Lead arranger. There's a whole lot of, debate, and it's relevant for league tables. But lead arranger typically, or what's the other one that, global coordinator. There are various terms, right?
But it's normally one bank leading the whole transaction?
Depending on the size of transaction, it's anywhere between 1 and 5 or...
All right.
No, it's there some, transactions have 5 or even more, and then, it can be anywhere from 1 to, I've seen as many as 10, but then it was kind of more of a club deal or, so.
Got it.
Yeah. There is no technical limit or there's nothing academic about it.
Give me an idea of size. How big is this syndication, loan syndication, globally in Latin America and emerging markets?
As this is a very last minute, I have not had a chance to give you, to look up the data, but I give you a sense.
Yeah.
So, and that's data I remember from a couple of years ago.
All right.
I think the Latin American, if you look at Latin, the Latin American loan market any given year is anywhere between 25 and maybe $50 billion. And that is very skewed towards large transactions, because some of the big names every year do their corporate revolver. So I don't know the amount of transactions, or I don't recall the exact geographical, breakdown. Now, this is Latin America. The largest market, invariably still to this date, is the US. And just to put in perspective, and again, I apologize, I don't know the absolute numbers. I remember a couple of years ago, an article coming out in the news clip, what a bad start into the year the US loan market had, that in the first week, only 35 billion were printed. So a bad week, a bad January week in the US loan market is a good year in the Latin American loan market.
Oh, wow.
So, and again, these numbers are shifting, but the bulk of it, and they're also very different markets. The Latin American market historically has been very much bank driven. The US market is much more institutional driven. So there is no homogeneous thing as the market. And then obviously over the recent years, we've got a shift also as the private lenders have, entered the market, and that yet again kind of shifts the whole balance.
All right. Just to give you a sense of perspective, the Brazilian debt capital market reached $100 billion last year, including onshore and offshore. So it's very relevant compared to Brazil. And can you talk a little bit about credit analysis? That must be one of your expertises.
Well, funny enough, it's not.
All right.
And
tell me more.
No, because obviously I have a good understanding of credit.
All right.
But I have always focused more on the market.
Because
my job was not so much kind of, the individual credit. Obviously, I have to have a very good and solid understanding of credit and the fundamentals.
All right.
But I was always, and continue to be mostly, or very focused on the market. What can the market absorb? What is a price point that the market might demand? What's the potential, demand if somebody needs to raise $250 million? Do we have visibility on really getting to $250 million in the context if the firm I worked for was willing to provide an underwriting and take on the risk and distribute later? So, yes, my outlook was always very much or more focused on the market, obviously on the heels of a solid understanding of credit.
So basically, you will take a look at the credit analysis, but in principle, this transaction has a solid credit profile. And then given that, or assuming it has a solid credit profile of whatever type it is, then you will assess if that will be demand in the market and where that demand is. And maybe you can suggest a different structure or a
different price, or think about maybe we need more collateral, or like there's a variety of aspects, and, the term, it's a solid credit, even a less solid credit, there might be a market for it. It might just be a different outlet,
Yeah.
So not everything is AAA. No, I mean, so it's always, we use the term, it has to be a solid credit. Well, there can be very challenging credits that can still be placed, but at different price points, maybe with different compensation components. So the word a solid credit is kind of a relative term.
Exactly. Well, obviously, having worked in this market for 25 years helps. But in addition to that, what do you think your essential qualities are? Is it a more technical job? Is it more a relationship job? What's more important?
See, the cynic that I am, I always say I'm actually not a financial guy.
All right, I'm loving this.
I'm a people's person.
All right.
And what do I mean by this? There are a lot of people who are extremely good and can very technically analyze every situation. There are people you can call, make the infamous call at 3 a.m. in the morning, and you ask them in tab 38, in 2027, why does the EBITDA rise by 2.5% as opposed to, the following year projected 3.7?
Uh-huh.
And
They explain that.
They explain it, and they're very good, and that's very important.
Uh-huh.
Yeah. Now, my job has always been, and that's, I think, where which is a quality not everybody has, but some people have it, is more finding the person who wants to have the conversation about this. Because at the end of the day, syndication, loan distribution, and, to a similar extent also, debt capital markets, all the other dynamics at times to play, is knowing who would want to look at the situation and, eventually, be the right person to actually also join the transaction, So, and obviously I'm very loosely saying that I'm only a people's person.
Yeah.
Again, it's on the back of a good understanding what investors are looking for. And then it's more kind of connecting the dots. Okay, this credit with these parameters, we had a conversation with X investor. They told me they're looking for that return profile in this country. Let's call that. So you want to make these, high impact calls or work with whoever you work with, say, do me a favor, call this person, give me the feedback. So it's really more of a juggling kind of, knowing how to read the room, knowing how to read the markets kind of a job that I've always done. Yeah.
That's fantastic. Tell me a little bit about how it was to work for Credit Suisse, and if you can compare it, how was compared to Deutsche Bank?
Boy, I'm under strict NDA.
We don't need to talk about it.
No. That's a question. There are many facets to it.
Yeah.
Quite frankly, Deutsche Bank is, my experience at Deutsche Bank was very different because I started at Deutsche Bank as an apprentice out of school.
All right.
And then, did internships. Actually, my first job at Deutsche was an internship in Buenos Aires in 1985 without having any training.
All right.
And that's in itself a separate, story to be told over a drink. And then I did an internship, and then I went to university. While at university, even did another internship at the time. It's probably one of the first interns ever that Deutsche Bank sent to Indonesia in 1989.
Is that right?
Then, after finishing undergraduate, I convinced or had a constructive conversation with Deutsche Bank that paid for my master's.
Uh-huh.
Then I started as a trainee. So when I finished Cambridge, I think the only reason they paid for it because it played a little bit to their ego.
Uh-huh.
So and then I was a trainee. So I was always more, the junior although I made it, my last job was director of Latin American loan syndications, in New York until 2002. I think there were similar aspects of the culture, and kind of a bit, let's put it honestly, a bit of a cutthroat culture where you had to be kind of very firm. But then also, I did some things in between. I think the culture at Credit Suisse, was for most of the time in emerging market, was a very strong emerging markets force. And it was very interesting that actually most of the senior people from when I interviewed in 2006 until I left in 2016, most of the people, not at the, two-mention level above, but on the transactional side in emerging markets, they were all the same. So it was longevity, there was teamwork, it was hard work, but also, work hard, play hard. And we had some fun between, and the rest is history.
If you want to work in the financial markets in a large international bank, you need to ace your English. You need a perfect English. You need to speak like a native speaker. In order to get there, it will help to spend some time abroad, maybe in the US, maybe in England, or any other English-speaking country. But not everybody can do that. So you get to do the next best alternative, which is bringing English to your life. And why not attend some classes in English? So thinking about that, I have a very special course to offer to you. Why don't you watch Introduction to Investment Banking in English? So Introduction to Investment Banking is a coursework that I have prepared that talks about investment banking, what we do, what you need to know, what are the main products. I talk a little bit about M&A. I talk a little bit about equity capital markets, IPOs, and follow-ons, everything in English. So you want to try that, you like the content, and you want to practice your English at the same time, you have to watch Introduction to Investment Banking by Banking.